Hi, I'm Chuck Gibson. This is Taking Stock with Art Jarvis, a bi-weekly discussion of what is happening in the economy, the world of finance, and personal investment with Art Jarvis. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Now here is Taking Stock. Welcome, Art Jarvis. Taking Stock, episode number 37.
Happy to be here. Welcome back to you.
Thank you. Yeah, now we can tell everybody. So, it was a great 2 weeks vacation. Yeah. It's good to be back. Good to be back with you and ready to take stock. What's going on in the world of economics and investment. And, so.
The good news is the markets have never let us down. There's always some excitement to talk about or something. So.
Well, I was out of country. Like I said, now we can tell people. I have no idea. The only thing I can tell you is what we talked about, offline here, was that the American dollar ain't doing great in Italy.
Yeah, that's the dollar needs some help. That's for sure.
So, but anyway, the exchange rate is a negative for us currently. But that aside, so what? The last couple of weeks, got no idea what's been happening.
Well, I guess the good news is not a whole lot of changes from a economic standpoint. All the economic numbers we've seen have looked good. Mm-hmm. The trend is continuing in the same direction. So that's good. Employment numbers look good. The inflation numbers look good. The major excitement is we have an election coming up in a week, if I'm not mistaken, and that's where all the drama is coming from.
Today is Tuesday, October the 29th. So indeed, next Tuesday will be the first Tuesday of November, and that's an election day. Mm-hmm. And this, of course, as we all know, is a presidential election year.
Yes.
And there's certainly, and again, offline I told you, one of the nice things was not a single campaign ad or campaign comment. Nobody said a word, across the pond. About what was happening in terms of any election stuff in the U.S. of A. So, but we're 1 week away. Now, hey, quick question. So are you among those who cast your vote early?
No, I like to walk in on election day, and cast my vote the old-fashioned way. So.
Yeah. Well, it's been an interesting piece of it, and we're a little bit off the taking stock, but you do have to take stock of what's going on in the nation, and during a presidential election year and 1 week away from election day. So it's been an interesting thing to hear the encouragement to go ahead and vote early. Not, I think it's been something more commonplace in the Democratic Party, has encouraged that more so in the past than, we'll say, the Republican Party. But it seems like it's equally encouraged across the board this election year. So that's been an interesting thing. But just for the record, Sue and I, like you, we like to go in on election day. So we will cast our ballot on election day. I heard some of the reasons that there was an encouragement to go ahead and vote early is because that way the early returns don't sound like favorable to one candidate or the other.
Right. Not that would happen.
Well, but so I was listening to an explanation of how it works from one of the, what do you call them, the electoral board, the Board of Elections officials. Mm-hmm. There is no count of the early votes. They're secured.
That's right. They're
scanned, but they are not counted ahead of time. So if you're hearing here's the early returns from the early votes, that's not supposed to be happening.
They can't tell you what those. They shouldn't be telling you because they shouldn't be telling you because they shouldn't know. Right. Yeah, you're right. You're exactly right.
Yeah.
I guess I'm old school. I like to do it on the day of, unless I know I'm going to be out of town or something like that. But but I think the nice thing about it is elections can be influenced by weather or other things. So this gives you extra time to go do your civic duty. Okay, so I think that's a good thing. So the more people that are able, the more people who are eligible to vote, gives them more of a chance to vote. So.
There is certainly a better opportunity with all the avenues to vote aside from just election day. There's certainly a better opportunity for every eligible voter to, in fact, cast their ballot, one time legally. I heard a funny thing yesterday, and we don't mind. We're here in Cincinnati, we're here in Loveland, and I would imagine anybody that happens to listen to Taking Stock, these podcast Taking Stock episodes, would certainly be familiar with the name Willie Cunningham.
Yeah, probably.
So to throw Willie into the mix today a little bit, heard him talking with one of those Board of Elections officials yesterday, and of course Willie, he has his way with asking the questions, and he said, so they're going through the whole process of early voting, and he says, and he gives an example of somebody else. He doesn't say if I did this, but he says, if so and so cast his ballot early, and he did, everything's fine, he did it legally, and it's cast, and you guys have it, locked away or whatever. But he's like, now it's getting nearer to the election, and he's like, well, you know what? I changed my mind.
Change your mind, right?
So anyway, don't need to go through the rest of it, but it was very interesting. You can't change your mind. You cast one ballot. Mm-hmm. You cast one ballot, and that's it. That's all you're allowed to do. And it has been cast properly and legally, and it's counted. And if you do, in fact, so if that person who cast a ballot early shows up at the polls on election day and tries to cast another ballot, that it's not going to happen.
Right, precisely. Yeah, and that emphasizes that when you walk into the election location or precinct or whatever, you should know what you're doing. Okay, and the one thing I would say to you is my one of my favorite days of the year is the day after the election.
I heard you say that. Yeah.
One, all the signs come down, or most of the signs come down, which and I don't know how other people feel about it, but I have never cast a vote based on a sign that I saw. Okay, so it's pretty, I have a plan, and then you're right, it's a presidential election, but there's a whole lot more. We've got judges and congressmen and things like that, so there's a lot to vote on, and we have issue 1, which is if you haven't done it yet, you need to get in there and read it because it can be confusing. But the other thing is the day after election is it removes a whole lot of uncertainty, and that is what messes with the markets. We talk about it a lot. The market does not like uncertainty. Well, the nice thing is hopefully by the next day after the election we have some answers and remove some uncertainty, whether you like it or not, the outcome or not, but you get rid of the uncertainty and then we can move on. Right.
Which brings us back, that's the taking stock aspect in terms of the economy and investment, because the uncertainty of what's going to happen, is erased. Mm-hmm. Election day's over. We know who's who and what's what.
Yeah. Cry over it.
Hopefully. I don't know when. Now we sit here and we say that, and I get it, and I agree with you, but mainly for the first reason, which is the day after election, signs come down.
Yep.
But in terms of we know and the uncertainties erased, what was the last presidential election that we actually knew the day after?
Yeah, I don't know. It's been a while. I mean, we've dealt with hanging chads and all kinds of things.
It's been
the
ridiculous.
last couple of decades. Yeah.
It's been ridiculous.
Yeah.
Well, and in terms of the signs, though, or you're about to, if you don't already, where Chuck stands on signs during elections.
Right.
Yard signs, whatever. I believe they should be 100% banned.
Yeah.
That there's no place for signs. I don't really care. You got a sign in your front yard that says, vote Smith.
Right.
Well, good. You're voting Smith. I really don't care.
Right. Well,
your vote is your privilege. You're an eligible U.S. citizen voter, and that's your privilege and your private right. Mm-hmm. And the key word there being private. Cast your vote.
Sure. And
I don't need to know who you voted for, and you don't need to know who I voted for. and we certainly don't need to argue about it.
Yeah, well,
and that's where this uncivil behavior has gone in all these most recent years, and it just continues. Social media has only heightened it. That's unbelievable. So signs and social media and radio and television and newspaper and magazine promotions, ads, whatever you want to call them, it's just it's out of control, and I just feel like it should be banned.
Sure. Well, two things. One, someone much smarter than me probably could sit here and tell you about the psychology of signs, right? So there's a reason the signs are out there, right?
Yes.
I mean, they don't have an effect, on you and me and a whole bunch of other people, but the truth of the matter is, signs do have an impact on people, right? That, and it's, if you see, if you go in there not knowing where you stand on certain things, and you've seen more of these signs, and there's something chemically and psychologically that happens. So that's, and again, I'm not armed to have that discussion. But the other thing you mentioned is you being out of the picture for the last week or two. It's the rhetoric has definitely ramped up. Okay?
Sure.
There is no doubt about that, and we've been talking about it this entire year about the rhetoric involved with an election year is what causes volatility in the market. So the number of ads, like watching football this weekend, just there's just ad after ad after ad, and some of them 3 in a row, all for the same candidate. So you can tell where they're throwing their money and things like that. But the rhetoric started, and but the nice thing about the day after is hopefully the vast majority of all that disappears for a year or part of a year. But
well, I have to throw one thing in the mix. You talked about, like, here in Ohio we have issue 1, and you said it can be confusing and people need to read it. Good luck with it.
Good luck. I didn't say
13,000 words in the ballot language.
I didn't say it was an easy read.
I will say this to anybody listening to this podcast, which you're going to hear it. This is Tuesday, the 29th of October. Produced, published, and available to you, via Loveland to Beacon, no later than Wednesday the 30th. So if you're listening probably Wednesday the 30th or later, between now and next Tuesday, whatever day that is, November 5th, I think. November 5th is Election Day. But the point is, I hope you're listening to this on Wednesday the 30th. If you need to read issue 1, start reading it now. You cannot walk into the polling booth ready to cast your ballot and say, okay, now I need to look at this issue 1 and decide. You need to know going in what the language is, what it means, not the rhetoric, but what it means, and then cast an informed vote, yay or nay, on issue 1. But I mean, that's just an example of some of these things that happen and that get put on ballots and put on in a certain way.
But the problem is like you said, it's a lot of words. Okay,
I've heard it was 13,000 words.
That's a lot. Yeah, that's a lot of reading. But I mean, you may have a good sense of where you stand on an issue. But the question is, okay, I know this is how I stand on this issue. Does that mean I'm a yes, or does that mean I'm a no?
Correct.
Some of these issues
that's what the confusing
can be
part.
Very confusing. You may think you're a yes, but based on what you want to happen, that might actually be a no. You know what I mean? So that makes it difficult, and people get accused of intentionally making it vague or making it too complicated and things like that. I'm not sure I'm in that camp, but it doesn't make it easy. I mean,
those aren't accusations; those are facts.
Okay, well, but
where I stand in that camp.
If I'm voting for, I got a choice between Judge Jones and Judge Smith. That's pretty straightforward, right?
Sure.
You figure out who it is, and then okay, that's straightforward. But you get into some of these levies and some of these issues and things like that. Yeah, you need to know what the wording says and things like that. So, I not to be negative, but I would assume there is a lot of people who show up into the polling stations and maybe are not fully armed. So, but
right. Well, we encourage you to vote. If you are a U.S. citizen eligible to vote, please go out, cast your vote early between now and next Tuesday, or show up on Tuesday, November the 5th, and cast your vote Art Jarvis and Chuck Gibson, I know we both sit here right now and encourage you to do that. If you are an eligible voter, do it. But please make your choice an informed choice, and let your voice be heard the way you actually do want it to be heard. That's enough about the election. Right?
No, I agree. Yeah, nice thing is, so we move on from the election, whatever that is, and on Wednesday, the world hasn't. You wake up in the morning and the world hasn't come to an end because of the election and things like that. Which there's some interesting discussions out there. So the good news is once again, from an economic standpoint and from a corporate earnings standpoint, things like that, we're looking good. So it's interesting that we're up over 30% in the last. So interesting that today's the 29th.
Right.
So 2 days ago would be the 1 year anniversary of the bottom of the market. So on October 27th, 2023 was the more recent bottom of the market.
Yeah.
Okay. So we're 1 year from that now, and we're up over 30%. We just had rate cuts a month and a half ago, and we've talked about that before, that, on average, the market does about 18% the 12 months following a rate cut.
Right.
We're up 2% from that point today. So somewhere in that, definitely double digits, but, somewhere between 2% and 18%, or maybe more, maybe less, we still have some pretty good upside, number one. Number two, the corporate earnings are coming in. As of yesterday, I believe, we've had 30-something% of the S&P 500 companies report. 75% of those companies have reported positive earnings surprises. That's a good number. It's a little higher than normal. But it's not less than normal.
Yeah.
And things like that. And we still have the financial sector came in. It looks great. This week, going into next week, we're going to start getting the whole technology sector. So that's going to really sway the market, because if the market's up 30%.
Well, we have an eagle eye. Art Jarvis Global has an eagle eye on that technology stuff, right?
Well,
because it's going to be
to an extent.
Well, there's certainly been a focus on what technology stocks have done over certainly the last 3-6 months, maybe even beyond that, but certainly the last 3 to 6 months.
Well, for a while there, it was all about technology,
right,
and even more so all about AI, and even more so about NVIDIA, right?
Right. That's how we broke it down. Technology, no. AI, no. Not just AI, but NVIDIA.
There's a lot of new millionaires around because of NVIDIA, because of how that stock did, especially within the last 12 months or so. But my point of this is, what we're looking, as long as nobody does anything stupid, which is my normal caveat, we look good. We're plugging along. It's a good clip. Can't do anything about the inflation we had. Well, you can, but we're not anytime soon.
It happened.
It happened, and it's pretty much not going to go away. And you have these discussions about where we are from an economic standpoint, but they're trying to say, well, I'm paying way more for my goods and services than I was 2 years ago. That's a true statement, 100%. That's a true. We are most certainly paying way more than what we were paying for a lot of things, especially if you're talking about, real estate and insurance and things like that. But if you look at the economy from a growth standpoint and a corporate earnings standpoint and everything, it's we're once again, that R word, the recession word, that to me is not on the horizon. Okay, so let's get through this election, and we'll see what the outcome is. And but then, from my standpoint, let's try to move on and focus on something that's more solid, in my opinion.
And I have two questions going back to what you just discussed about, from October 27th, 2023. To 2 days ago, October 27th, 2024. the term you used was, we've seen a 30% increase.
Mm-hmm.
All right, so I'm going to ask you about that.
Okay.
But also what I want to ask you about, the last thing you just talked about was, nothing we could do. The inflation was what it was,
Yeah.
and, we can't go back. And we've certainly seen we're paying more. The cost of living has gone up.
Mm-hmm.
We've had this conversation before, but here we are, a couple days after that 1 year mark, from the low, or the bottom of the, whatever you want to call it, the bottom of the market
Right.
a year and 2 days. What is the status of the consumer, in terms of the spending outdistancing our individual earnings?
Mm-hmm.
It's like, how does that look in terms of those numbers that are reported? I mean, are we doing okay? Am I doing okay?
Yeah.
Are the earnings, individual, personal income, keeping pace with the increased cost of living?
Yeah, great question, first of all. But the answer to your question is, it's not it's catching up, I guess, is the better way to put it.
That's fair. But
so you had 9-10% inflation back in 2022. We're still in the process, and you look at some of the strikes we've had and things like that.
Right.
We're still in the process of people getting a major bump to try and catch up to what has happened over the last couple of years.
Right.
So you're starting to see, they're going to get a 25% increase in pay over the next 3 years, and that sounds like a huge number, but they're actually getting bumped. They're getting close. They're moving them from where they are now to something closer to what it's costing them to live right now. So trying to answer your question, I mean,
well, you can't be sure of everybody, but in general, the answer, is the individual income keeping pace with the outgo, and I think I think you said it really well, actually, Art. That the bottom line is, we're still catching up.
Yeah.
As individuals, we're still catching up. I didn't see an inflation rate of 10% matched by an absolute 10% increase in my earnings individually, and neither did anybody else.
Exactly.
So little by little, maybe people are starting to make more, and it's starting to balance out a little bit.
Well, I mean, we've gotten to the point where we wanted a whatever they call a livable wage, I guess is the term they use. And that's great. And let me pick on the fast food industry. They went making from below $10 an hour. Now they're making $14, $15, $16 an hour, depending on time and what they do. But guess what? The thing that always perplexes me a little bit. Well, I want $15 an hour. Well, okay, that's $15 an hour. But guess what? The cost of buying food at that place, wherever that is, has also gone up. So who
gives you $15 an hour, and where did they get it from?
Yeah, well, guess where they got it? They got it from us.
That's the whole vicious circle of the economy, right?
Yeah, precisely. So, it's like, great, okay, you make $15 an hour now, but guess what? It now costs you 40% more to eat at that restaurant. And again, I'm just picking on the restaurants right now. But, so that's great, but where is your livable wage now? I think is the question, and I don't have a good answer for that. But I think I think if you sat down and talked with people, some would say I'm behind,
right,
and other people would say, okay, I've kind of caught up, right?
Okay,
It's like I'm not happy about what things are costing me, but it's not,
Yeah, I would rather have seen these increases in my income outdistance the outgo, but it's catching up.
Yeah.
It's catching up. So which brings, I said there was two questions.
Yep.
So from what you discussed, so 27 October to 27 October, 1 year, 30% increase. We have experienced a 30% increase. What does that mean?
That would mean if you're looking at your investments, if you're looking at the S&P 500 index, I mean, a whole bunch of different indexes, a whole bunch of different numbers. But in general, if you're talking about the S&P, especially if you're looking at the unweighted index, that if you have 100% stock portfolio, if you're doing a decent job in your portfolio, or your investment advisor is doing a decent job, your portfolio, your investments, your investment assets should be up roughly 30%. You know, and again, you'll be a little bit behind, a little bit ahead, depending on if you're less or more aggressive. But yeah, so that you're heading into an election. My house is worth way more today than it was worth a couple of years ago. My investments are way up from where they were a couple of years ago.
Net worth or
yeah.
What do you, not net worth, but
net worth's a good thing. I mean, it depends on where you are. That net worth takes into account your debt and things like that. But the asset part of the equation is definitely up, and have you done a good job of handling your debt too? So hopefully, depending on your age and things like that, you should be better off from a net worth standpoint.
Yeah.
Now, some people will argue different, and I get that. If I go to buy gasoline, I have to buy gas, right? It's not. I don't step up to the gas pump and say, "Oh well, gas is $3.50 today, and so I'm not going to buy gas." Guess what? I'm buying gas. I have to, right? It's. I'm trying to be generalized about the answer, but there's people who would argue I'm way better off, and there's people who would argue I'm not better off at all. Yeah. But I think, and I guess my point is that I think if we're looking from today to 12 months from today, I still believe we probably should be able to make a "I'm better off" statement, unless someone messes it up for some reason. And there's a lot going on out there. Let's be clear. I mean, you have everything that's going on in Israel right now. That's getting a little hotter. It's getting a lot hotter, I guess. But then you start talking about North Korean troops going to Russia to train to go to Ukraine. Well, guess what? That's not a good thing either.
No.
So you got to. We worry about this. We worry about prices. We worry about this. But you got to keep an eye on the things that are going on the peripheral, also. So, the market climbs a wall of worry. That's the saying, right? There's always something to worry about.
Like that.
Always something to worry about.
Climbing a wall of worry.
Yeah, and it's I've said it to you before. I can give you 12 reasons why you should buy into the market. I'll give you 12 reasons why you shouldn't buy into the market. You have to decide which ones outweigh the other.
Well, we sit here during these taking stock episodes, and we talk about what's going on in general in the economy. That's for everybody. Mm-hmm. But when we talk about the we, when Art Jarvis talks about we are seeing this 30% increase, we're talking to you and you're investing. Mm-hmm. And again, anybody listening who's not currently, developing their investment portfolio, we've said this many times too, especially if you are 20-year-old ears or 18-year-old ears out there hearing this, we strongly encourage you to begin, making some kind of, whatever retirement investment plans, even if it's just as simple as, starting out with a 401k or whatever, maybe whatever your employer might be offering you to help you get started, or we even said, just put your own $10 into something, whatever it is, $10 a week, $100, a month, or whatever it can be, so that encouragement, so that you can be part of that. We have seen a 30% increase in our asset portfolio, whatever that may be, stocks and bonds and whatever areas you could be in.
Yeah, it depends on your tolerance for risk and things like that. Yeah, there's two ways.
I hope that the 20-year-olds have some good tolerance and can be,
Yeah, if you look at things from a general term, a 20-year-old should have much more tolerance for risk than someone who's in their 50s or 60s, right? But, again, you're talking about psychology. There's 20-year-olds out there who don't ever want to see their portfolio drop. Right, and if it does drop, they lose sleep at night. Well, that's kind of when you're setting up a portfolio for a client. I mean, those are the kind of discussions you have, and you continue to have, because it's very easy to say, "Oh, yeah, I'm very risk tolerant," right? Until the market drops 20%, so guess what? You're not as risk tolerant as you thought you were, right?
Right.
So there's generalizations. I mean, if I'm talking to a 20-year-old, I am going to try to move them up the risk curve, right? You get it with a 50 and 60-year-old, then it becomes much more of it could be more conservative, but it also, it depends on their risk tolerances, their time frame, their liquidity needs, and things like that. So, this 65-year-old might be able to continue to be very aggressive, where this 65-year-old might not want or be able to be moderate. The other side of that equation, I agree with you 100%, is if you have the ability, the sooner you start, the better off you are. That's a given. Okay, if you start when you're 20-something and you're consistent about it and you leave it alone, in general, you're going to be in good shape, right? And especially if you do a 401k or something like that, where your employer is matching some of what you're putting in, that's even better. I call that free money, right?
Amen.
But here's the other side of the equation. I'll have a 20-something, 30-year-old come to me who just had a baby or something along those lines, and they want to open up a savings account or an investment account for the baby's future and stuff like that. Great idea, but the problem is if you've got $25,000 in debt on a credit card that's cost 20-something%, you need to take care of the debt side of the equation before you take care of the asset side.
Yeah. There's two sides.
Yeah.
Yeah. So in a minute,
okay,
in the final 60 seconds, what the heck is the message from today? And then, so 30 seconds, what's the message from today's? More than anything else about what's going on in our economy today right now. I think what you said is we're in pretty good shape.
Yeah. I've said this numerous times, and we're still in the same spot right now. Stick with the plan.
Stick with the plan. And you don't see a recession as an issue on the horizon.
Well, not anytime soon. I can't predict what's going to happen in 5 years, but things are
right.
Things are looking. Yeah, it's. I'll just say it. Stick with the plan. There's no reason not to. In my opinion, there's no reason not to stick with the plan at this moment in time.
Things are going properly,
forward
and smoothly. So the final 30 seconds, as it were, is, hey, we'll be back with Taking Stock, episode number 38, in 2 weeks from today. And that will be a week after the election. So we will have had, the next time we get together, Art, we will have had 7 days to digest all of the certainty that is back and no more of the uncertainty. And plus we will have been able to breathe for 7 days without having to take in with every breath somebody's campaign ad.
Yeah, I'd much rather have that conversation with you 1 week after the election as opposed to 1 day after the election.
Right.
Because you got to sort through it, you got to digest it, right?
So for the listeners, come back in 2 weeks. We'll have a whole bunch of fun talking about what the election results ended up being and how the impact has already touched us, or what the impact of it is. For now, Art, thank you.
No, thank you very much. As always, enjoy it immensely.
The time flew by.
Yeah, it always does.
At least for us.
Always does.
I hope the listeners find it fast and furious. But thank you so much for your insights into what's happening, especially since they were mostly positive and good news.
Yeah, definitely. And thank you, Chuck, and thanks as always to Loveland Beacon.
Taking Stock 38 coming up in 2 weeks. That's it for Taking Stock episode number 37. Thanks for joining us for this edition of Taking Stock with Art Jarvis. Join us again in 2 weeks for our next edition. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Jarvis Global Investments, LLC is a registered investment advisory firm. The advisor is not attempting to furnish personalized investment advice or services during this production. Individuals should fully investigate the appropriateness of any investment before investing. Past performance is no guarantee of future results. Investments may lose value.